Hey everybody, Gary with Basecamp Trading. Let's take a look at what we consider to be well-defined support. This was the ES this afternoon, and this is our large bar Unorenco chart. We call it our large bar because it's a little bigger than our standard one. This chart is a 4-tick trend, a 10-tick offset, and a 20-tick reversal chart. And you can see that the ES actually had been in an uptrend. You can see we've been making higher highs, higher lows. We came down here. We actually broke the uptrend right here when we broke below the previous pivot low. That broke the uptrend. And then we put in a lower pivot high, changing the trend on this chart to a downtrend. We had a lower low and a lower high. And then you can see we pushed down and then bounced right here, 34.55. Pushed back up, and remember, these are larger bars, so we pushed back up another 24 ticks, came back down, bounced again, pulled back, bounced a third time, pulled back, bounced a fourth time. So at this point, you can see this is definitely what we would consider well-defined to even maybe significant support. Definitely well-defined support. I mean, we bounced off this 4 times, pulled back again, and we pulled down into here. Didn't quite touch the line, but you can see we bounced off of that zone. You know, these support lines aren't always absolutely to the tick. It can be, kind of an area. And you can see we came within 1 tick here, and then see that wick right there? We bounced again pretty good off of this area. So, again, this line in this area is definitely well-defined support. Finally broke underneath it. We hit our first target because, again, we're trading the larger bars. So we're risking 20 ticks. Our first target's going to be 20 ticks. So we hit our first target because this gave us 20 ticks to the downside. Then we pulled back, set up a fast line zero touch. The fast line is the blue line on MQ momentum. That's our fast line. The pink line is the slow line. We had a momentum reset, fast line zero touch, and that's the fast line pulling back to the zero line. The zero line is the line that the histograms move above and below. And these fast and slow line zero touches, there's a little range. It doesn't have to be an exact hit to the zero line, but within tolerance right there. So painted our fast line zero touch arrow. Then we had the double wick to the downside. And then we got a nice push to the downside. We ended up getting 3 targets out of that. That, again, risking 20 ticks. Came close to getting stopped out if you took the first entry right there. Because, again, we're risking 20 ticks. And this pulled back 19. So close to getting stopped out right there. But then continued to push on down. And this actually went more than 60 ticks to the downside, but good enough for 3 targets or $600 per contract. So $200 per contract on the initial support break, followed up with the fast line zero touch. This is good setup. All of our moving averages are in alignment. You see the clouds under the MQ trend, the smooth 50, the 50 SMAs under the cloud in the smooth 50, 34 EMAs under the 50 SMA, 18 EMAs under the 34 and the 50 SMA. We got a momentum reset, so now we have plenty of room for momentum to accelerate our trade in the direction we want to go. And we were even confirming that with our 30-minute chart. Now, this wasn't the most bearish chart in the world, but you can see we were getting some bearish price action. When that breakout occurred, that happened right here. When we broke support, that was actually happened right here. And at that point, we'd had a shooting star that triggered to the downside. And then we had this bull flag triggered, which became a failed bull flag. Often failed bullish turns bearish. And so we were getting some bearish price action. At that point, the 5 and 13 hadn't crossed to the downside yet, but we were getting some bearish price action. And momentum had gone bearish. The fast line had crossed underneath the slow line on momentum, turning our histograms red when we were breaking support. So we had a somewhat bearish chart with bearish momentum, and then a nice Unirenco setup. So again, what we call well-defined support is you want to hit it at least 2 times. 2 or more times is even better, and here we hit it basically 5 times. So this definitely qualified as well-defined support that led to some nice shorts in the ES today.